Hello folks, my name is Eric Wilkinson with ProTrader Strategies. You also very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environments, how those come in to impact the markets with some of my market analysis. Well, I do the same thing in these daily market commentaries, but I also talk about my option strategies that I'm implementing into my portfolio based on any given assumption I have. That goes from covered calls all the way to secured puts. So we're doing all of those strategies in my webinars where we drill down on the devil of the details as to how to streamline your process in order to find the optimal option strategy for any given assumption you have. All right, so without further ado, let's get on with the economic data and the geopolitical environment, what's happening in the overall markets with some market analysis. Well, this is going to be a really busy week for economic data. Not so much today. And Friday, we do have a holiday here, bank holiday, basically for Easter. Friday being a bank holiday, well, we're still getting unemployment data on that Friday. So that is going to cause a little bit of angst heading into Friday, as people will want to shore up, hedge their positions because they will not be able to do anything on Friday, really. So they're going to be probably making some moves this week. We also have some other things that are going to be driving this market. The Chinese government basically slapping margins down, or they're getting slapped with margins on these hedge funds out of these Chinese companies. One of them is a Tiger's Cub, and there's a couple of other ones. I can't remember. I just remember the Tiger Cubs one right off the back. But Wang's, he's a major contributor to this hedge fund, Bill Wang. Anyway, he started with Tiger Management. They also had some problems. But a lot of these companies are getting hit with these margin calls. They've been selling them through Goldman Sachs and Morgan Stanley in block trades well below current valuation. So there's all kinds of crazy things. Now remember, when there's a block trade, if somebody buys it below the market, they're going to go off and offset it in the open markets themselves and take that risk. So we could see these markets really juking and jiving at any given moment this week because there's a lot of things coming out, economic data, holiday, and everybody worrying about what the next shoe to drop is on one of these Chinese hedge funds where they have been over levered and are forced to liquidate. That could really be causing the overall markets to get a little wanky here. So without further ado, we want to talk about the overall market. So let's get on with it. Let's talk about some crude oil. I don't have all my charts set up right now, but crude oil is moving slightly higher today. Gas prices, I took a road trip this week, and gas prices were all over the places from $3.50 to $2.99, and that was within a mile or so of each other in some places. So kind of crazy where people are having to pay up for the new round or to fill up their tanks, and those higher prices are having to be offset to the consumer. Well, with some of these other places must still have some of the cheaper gas in their tanks, so they are able to charge a little bit less still. But we are still seeing some strength here in crude oil. Now, with the rest of the markets, we got the reopening trade is struggling here, folks, especially in the gambling sector. We're seeing a lot of these gambling companies come off a little bit. So with that being said, I do want to talk about a trade that I took off on Friday, and that was with my PENN trade. Remember, I did the covered calls in here. The overall market has continued to slide since I put this on. So these covered calls are pretty easy call to say they're pretty much worthless at this point in time, because if you guys remember, I took these trades off. I've been rolling these trades, sell the rip, I do the covered calls, buy the dip on something like PENN where we see the sell-off. That's when I'm doing that covered call strategy, all right? So that's how we're playing this entire move here. With that said, in PENN, I had was short the 190 calls. Excuse me. I'm long PENN from basically last year. Have been doing covered call strategies, folks. If you guys have been watching the daily market commentaries, you guys know it. I bought it at about $4.49. I've lowered my overall cost basis on this trade to basically zero now. Actually, I have a credit because I've sold covered calls so many times that I've actually paid off what I paid for the PENN, which was $4.49, and continued to sell covered calls on that. Now, if you guys remember back in March 15th, I sold some covered calls in here. So March 15th is going to line right up in around here. Sold some covered calls right near the top. That's when we sell those rips, right? Buy the dips. We've gotten a bit of a sell-off here with the broader markets in this gambling sector, the reopening trade. So with that said, I sold the April 190 calls in there for $1.36. I was able to buy those back for 10 cents on Friday. Probably get a little bit better pricing today as the market has come off even more by almost 7% as of right now. So those those 190 calls are probably trading for less than a nickel at this point, but I covered mine on Friday to get out of that trade. And then we can take a look at the NASDAQ. NASDAQ is coming off today. As we're seeing a lot, it's kind of weird. We're seeing some retail ETFs doing very well. Some other ETFs are doing well, but the overall broader markets are seeming to be very weak at this point in time with the NASDAQ down. As you can see here, we've got the Dow Jones Industrial Average off by 100 points on the day. Part of the things to talk about with the reopening trade, the airline stocks not doing too well, getting a lot of topping patterns here. Not quite confirmed, but I would almost be jumping on board with this trade as a confirmation as this market looks like it's ready to roll over there. And then we also can take a look at things like Walmart, where we're getting a bit of a topping pattern here. These are things that we're going to be setting up for in these swing trade webinars that I'm going to be doing here going forward, folks, is we're going to be watching for some swing type trade setups and then implementing option strategies around that strategy, around that assumption where we have a trend or a pattern that we're looking to follow, and we're going to implement option strategies around that. Well, the bullish bearish assumption thing isn't exactly all that we are concerned about. Yes, we do want a bullish or bearish assumption when we're dealing with this, but what we ultimately want to do is find the best option strategy, or the strategy that will give us the highest probability of success. And it's not always just picking a call for a long or a bullish move, okay, folks? So we're dealing with that in these webinars, where we will show you how to use those levers and pulleys in your brain to figure out the best strategy for any given assumption. And that's pretty much it. Bonds are coming off again today. Everything seems to be, pretty bearish for the most part. Nobody's really happy. I mean, even like gold futures are in negative territory as well. So just about everything is negative right now. So a lot of people probably a little bit grumpy on this Monday as we're seeing the market start to sell off here. But I haven't added anything. I am keeping an eye on a lot of things. As a matter of fact, I've got a watch list on a bullish and bearish type of setups that are being, built out. We haven't quite seen a lot of these confirmations, but they are set up for bullish and bearish moves. So I'm keeping an eye on those for the swing trade webinars that we're doing. So make sure you sign up for those at protraderstrategies.com. Finally, take a moment to go over a disclaimer, as we're an educational company. And finally, if you can't take that, take it easy.